Friday, September 5th, market analysis. Standard, like I usually start out with stock indexes, go to futures and some stocks, and then some other topics like the October lows. Now, we have a new high for the historical new high this morning, early, basically on the opening for most indexes, or some indexes, not all of them. But that's very significant. When markets do that, and then they close a lot lower or lower, especially when they have a bearish engulfing like the S&P 500 did and the E-mini did, it implies that the market's going to head south somewhat. Now, the first support level, 63.65, give or take a point, is the lows of the last few weeks, 2 or 3. And if we close below that, then a much more important 62.43 support level could, and I think should be, will be broken. Now, yesterday I was concerned about my expectation of lower levels, which has now been revived because of the bearish engulfing today. I was hoping it would close a lot lower than 2.5 or so points, and maybe even below whatever low it got down to, which was below yesterday's low, but that didn't happen. Nevertheless, we got a bearish engulfing. So what do we got for the 5-minute chart? Big break, got below yesterday's lows, came back so-so. S&P 500 spider, opening a lot higher, new historic highs, and then a little bit higher, all the way down to just a little bit below yesterday's lows, and then closed on some decent, modest strength, 2.5 or so lower. That's a bearish engulfing. And it is up against a bearish resistance line across tops, slanting upwards slightly, kind of like the top of an upward slanting channel or the top of an upward slanting wedge, neither of which really qualifies here, but there's some similarities. This turns me bearish all of a sudden. I like the bearish engulfings. I wished it was overbought at the same time. It was not. The last time we were overbought, we got bearish engulfings at the top of a rally, only for one huge down day the next day. So let's see what happens next week. I'm now turning bearish again. I know I've been waffling a bit lately, but I still think there's an expected high, and that could have been today, before the break into the October lows. Next chart. And you can see the sharp rally early in the morning, 6:30 California time, and a big break very quickly until about 8:30, 2 hours, and then it went bouncing back and forth, back up somewhat. Okay, QQQ. Almost. New historic highs, not quite. Closed a little higher, that's true. And it's not a bearish engulfing either. So, a failure to make new highs for the trend, a reasonably slightly higher close. I can't get excited about being bullish because of this action, but on the other hand, it's not particularly that bearish either. Next chart. We've got the sharply higher opening up against a little resistance on a very short-term 5-minute chart basis, and boom, back to where it was, came back up some. What about the NASDAQ futures? Almost new highs like the Qs, not quite. Closed a little higher as you'd expect, and did not have a bearish engulfing. But again, the now downside breakout is going to be below 23.034, 23.034 on a close. And then the lows that we made on about August 1st is critically important, because if that is broken again on a closing basis, it'll be a new low close for a couple of months, not to be ignored. And that was probably the final nail in the coffin for the beginning, which would have already happened, obviously, past tense a bit, for the move down into the October lows. Next chart, Sharply higher opening, failed immediately, came back some. And what about the Dow, YM? Almost a higher high, which is almost. I want to show you this, how important this is. We topped out back in December of 24, 9 months ago, 10 months ago, right at this horizontal line and the top of a kind of a double top. Took about a week. Big move down. Came all the way back up in late January to challenge the previous high in December. Couldn't make new highs. Topped out bearish engulfing ER sell signal on the high, of course, which we love, and crashed. Green at the bottom, bullish engulfing. I didn't think it was going to be this bullish, but it did turn out to be that way. All the way up until again, in the last week and a half, we're smack dab back up to about those same ranges where it topped out before in December and January. Resistance, and significant. And we have a higher high today, but not a new high for the trend up. Even if it was, it failed, closing significantly lower. Almost a bearish engulfing. I think we're turning down. I got a bearish engulfing a few days ago, but that didn't work, period. Today it got above that high. Sorry. YM didn't come back so well. Opened that nighttime market, actually. Fiddled around. There's your spike high early this morning, 6:45 a.m. California time. Crash, and then bounce back, sort of. Next, the Russell. It is a new high for quite a bit of time frame, but again, didn't maintain the higher high after making a new one. Closed below the old high. Not particularly bullish. Not a bearish development either. It's just disappointing, no follow-through. If you had stops above previous highs, you would have gotten stopped out and then wished maybe that you hadn't. I think this is indicative of a downturn. Remains to be seen, like the other indexes. Brand new, very new today. Look at the 1 minute chart, 5 minutes, sorry, and popped up, couldn't hold it, right back down, and came back to about where it stopped out before. What about bonds? Now, this is a different situation. Bonds had a huge up day on top of 2 previous strong up days. So only 2 days ago, we were at 113. Today, we closed or got up to 116.21. 3 2/3 or a little more of a point rally in 3 days, including the bottom day being a bullish engulfing. It wasn't green because it wasn't oversold. Oh, that's the only thing it was missing. So it followed through great, more so than I expected. This is a bullish engulfing. I'm sorry. This is a breakout to the upside. It is a new high and a new high close with very strong close ever since April. We are now close to the April high, which is then going to allow us to challenge a profoundly important high back in April 7th. So obviously I'm turning bullish on bonds. How is it going to handle the downside retracements? 115.27 looks interesting. A little bit below that, 15.21. And most importantly, around 13.25. So that's the area where I expect any downside correction to hold and then turn back up the new highs again. And we're not overbought, but very close. So maybe early next week we'll top out for a little bit and have that retracement. I have to say the same thing almost identically about notes, but it has cleared all obstacles except that critically important major top that was on April 7th. Ever since then, with a very sharp downside correction, notes have been going inside of that range, which developed over only about a week or so, And finally, they're starting to make new highs on a closing basis, except for the highest high. Now, yes, it got overbought, and yes, that means we're likely to turn down a little bit of some sort soon. But, markets can get overbought for a few days and several days, and even sometimes for a couple of 3-4 weeks, which is fairly rare. But, I could expect a little more strength here. We've got another resistance level way up here that I'm dragging over to the right. And that would be very close to the old top again in early April. I'm bullish, but a little cautiously at the moment, simply because we're starting to get into overbought territory. Downside corrections, obviously back to support levels that got marked, and then maybe a second one lower, but maybe not. But looks like up we go. Crude, down we went. Support, not oversold, but support. Could bounce a little. If I was short, I'd be lowering my buy stops. I would not be going short at these levels under these conditions, with it being in the support area. And I would be looking for buy signals, not only to get out of shorts, but or to potentially go long. Next, we've got the natural gas. Now for 3 days. We've got the highs being about the same. The closes are up a little bit, then down a little bit. We could very well be turning down. Remember, this is a head and shoulder top that I've been tracking for months and months, and I am expecting to see the lows recently challenged at 2.7. The downside objective is a significant amount lower at 1.3. Next chart. We've got heating oil dropping off even more through one support level. I think it's going to challenge the next support level, and I wouldn't be surprised to see it break below 2.18. Bearish on heating oil. Overbought condition with a new high for the trend and a new high close on gold. Now that's normally pretty bullish, but overbought conditions make me a little skeptical. Yes, the support area has been holding very nicely the last couple of days. Went through it, but closed above it, and then popped back up even more today. I'm bullish on gold, but I'm looking for a minor downside correction because of the overbought condition, and then a more strength coming up very soon. That's a support area that could very well contain the next minor dip. Next, we've got silver. We almost had a bearish engulfing. It would have turned red, but it didn't because we were overbought yesterday. And this only indicates that the overbought condition seems to be causing a minor downside correction, which I think has a little bit more to go. 40.40 looks interesting. I wouldn't be surprised to see something around 39.40. And I don't think it's going to drop much below, if even get down to 37.90. Next, we've got a little overbought condition. That's the resistance. Topped out, broke down yesterday big time in platinum, and went sideways today. Looking for more support levels to be tested, and a little bit lower. We'll see what happens. I'm not super sure about that. So, slightly negative at the moment. We're not anywhere near oversold, so there's room for a little bit more of a dip into the support area. Now, granted, if it starts closing way down at 1269 lower, at 1269 or lower, then that's a different story. Then we're going to get a lot more bearish. Copper, being dragged up by precious metals a couple of days ago, just got pushed right back down with everything else. I think copper is still in a big sideways, and frankly, I think it's going to make new lows relatively soon. Maybe it'll take a week or two, but we obviously need to break some support levels before it crashes into new lows again. We've got grain. As you know, I've been talking about a bull trend starting. It did in soybean oil, and that, frankly, is still barely alive. Next chart. Beans closed again lower today at a support level. I think we're going to see a little bit lower, but probably support's going to hold and turn back up. So I'm trying to justify another move up. Not quite yet. The only thing I've got is the support level, and it's now at the bottom of it. So there's a chance it could dribble off a more, but I'm looking for a turning point mostly. Soybean oil managed to hold just barely at the neckline, excuse me, and closed significantly lower, but again, around yesterday's low and at the neckline. I cannot afford to see soybean oil close any lower than this, or it's going to drop down very sharply, very quickly, and kill the long-term bullish head and shoulder bottom, which so far is still predicting 62.45-ish. I've got to see it turn up immediately next week, Monday, Tuesday, without making much lower lows. We're not oversold. I'm a little concerned this thing could fail. Soybean meal, a little update. Nice. Wasn't oversold. I still want to find, expecting to find, and looking for bullish indications in grains overall. A little update is nice, but nothing there. Corn, holding in a small range after making a new high by a few ticks. But the close is poor, a little lower. This could be topping out mildly for the moment. Can't tell. But I think very soon we're going to start to see prices above today's high and another surge up. I am looking for a move up to 440 and a quarter, and we'll see what happens then. Wheat, steady, no lower low, a little higher high than yesterday. Not much going on the close, net lower by a couple of ticks. Unfortunately, my bullish engulfing on August 20th got broken yesterday, so that didn't pan out very well. Very mildly, not really good. Excuse my cough. And could develop into a double bottom. I haven't got that much to say that's bullish about wheat at the moment. Not even oversold. Next, we have a sharp down day in Shell and getting oversold. There's fairly good support around today's lows and a little lower. But the more important, bigger picture is a lot of resistance stopped the last rally several days ago very nicely. And here we are dropping down to oversold conditions only about 4 days later, 5 days later. Maybe a little bounce and then lower. Next, overbought again 3 days now for Apple. But I'm very concerned that it's about to have a big move down. We got a gap to close to get down to, about 231. Yeah, maybe a little under. And I think it's about to do it. That means dropping back into a support area again. This could get a little tricky. So I'm looking for a downturn. I wouldn't be buying up here. Next, Tesla. Resistance basically stopped the rally and closed below resistance. I'll put a line right there, right at that tick high, and the horizontal, flat horizontal would be just about right there. So boom, almost touched it. I think it's going to turn down. We did gap up. There's a small gap to close now. And NVIDIA, new lows since early July. It's oversold, and it did gap down a little tiny bit. There's only a very small gap, probably $1. And bounce back, resistance, close the gap. And another little gap a few days ago, I missed that one, control of 12. And so click, so I don't remember, or forget that one. Remember. And there's that little one right there I'll leave alone for the moment. Looking for a bounce, but I think we've started something south here. The top of the market was a resistance test that stopped cold at the previous highs and had a bearish engulfing, then a big down day, another one, sideways, and then down again. So the bearish engulfing did what it was supposed to, but now we're oversold. So a bounce up to close the gap and then down again. Next is the E-mini. You guys have a great weekend and profitable trading to you.